afternoon from Johannesburg, South Africa. Welcome, everyone. As I understand, we have guests joining us from over 15 countries across the globe today. So again, a very, very warm welcome to everyone who has joined us here today for today's webinar. My name is Fatima Vauda, and I'm the Deputy Chairperson of the Financial Services Working Group of the South African chapter of the BRICS Business Council, who are currently hosting a series of engagements under the banner Accelerating a Sustainable and Inclusive Economic Recovery. These sessions have been made possible by 274 investment managers and the Industrial Development Corporation of South Africa. Today's session is titled BRICS ESG Indices, Accents for the Future of Emerging Market Investing, where we will unpack the idea of developing a BRICS ESG index. The format of today's presentation is as following. The first hour will be focusing on getting insight from our esteemed guest speakers. The last 30 minutes will be open to all attendees to pose their questions to our guest speakers. If you have any questions during the presentation, please type them into the control box on your control panel, the question box, and I will bring them up during the Q&A session at the end. So now to introduce our esteemed guest speakers, I'm going to kick off with our guest from Russia, Alexei Bogomolov, who is the Director of Partnership Programs Development at RSHB Asset Management. Good afternoon, Alexei.
Good afternoon. Good afternoon, friends. Goedemiddag in Afrikaans. This is a really pleasure to be on this event, and I extend best wishes from Russia, from Moscow, to participants and to speakers. Well, indeed, this topic is very close and very practical to us nowadays, and I'm glad that actually one of our initiatives are getting such an attention from big audience, and indices are not just theoretical.
Alexei, I'm going to interrupt you. I'm going to come back to you. I just want to introduce all the speakers, and then we'll come back to you. So thank you for that, Alexei. In fact, I've got a funny story to tell. Alexei walked into a supermarket in Moscow yesterday and bought a bag of apples and sent me a photograph of the back of the packet of apples, which had a South African flag on it. And so he was munching Cape apples in the middle of Moscow yesterday. And I thought, wow, this is fantastic, because it's a really good example of BRICS integration amongst the BRICS countries. But then as I started working on today's presentation, I thought, well, you know, what about the carbon footprint? So I'll deal with that question later on with Alexei. But welcome, Alexei, and thank you for joining us today. Also joining us today is Valdine Reddy, who's the Director of Capital Markets at our own stock exchange, the Johannesburg Stock Exchange, the largest stock exchange in the African continent. Welcome, Valdine. You're obviously not joining us from Moscow, but from Sandton, Johannesburg.
Good afternoon, everybody. Thanks for having me.
Thank you. Next, we've got Gareth Allison, who I believe is joining us from the wonderful city of Cape Town, who's the Executive Director of Client Coverage Africa at the MSCI. Good afternoon, Gareth.
Good afternoon. Almost a separate country, but yes, no, it's just Cape Town.
All right, and then joining me today is my very dear colleague, Dr. Daniel Page, who's the Head of Quantitative Strategies at 274 Investment Managers. Hello, Daniel.
Hello, hi.
Okay, so before I move on to interrogating our guest speakers on the subject of why we actually need an ESG BRICS index, I want to just provide you with a little bit of statistics on the BRICS bloc to put things in perspective. So BRICS countries together at the moment account for more than 40% of the world's population and nearly 50% of the world's labor force. It's expected and predicted that the combined GDP of BRICS countries is projected to exceed $128 trillion in 2050 as compared to a projected $66 trillion for the G7 countries. So clearly, this is a region none of us can ignore, and no institutional investor or retail investor globally cannot think about the BRICS nations in any investor's portfolio. So I was taking a look at how we as BRICS countries and nations rate on multiple, as you know, there's multiple global sustainability, ESG types of scorecards and rankings and indices, etc. And I'm afraid we do not rank well when we compare ourselves to the developed markets. And, you know, herein lies the issue. And I mean, the whole discussion was, why do we actually need our own independent, dedicated BRICS ESG index? But when you start really digging through all these things and you look at the issues and you say, you know what, we're actually quite different. You know, the differences are almost, you know, they span every metric. I mean, from education to income, to religion, to literacy, to market access, to resources, to technology, to infrastructure, to logistics. And you know, when you think about all these multifaceted differences and the implications, that's probably why, you know, BRICS countries are now looking at developing an ESG standard that's more representative of this block of countries. So as a result, you know, also, you know, we've seen COVID accelerate a whole lot of urgency, particularly around ESG, and we've seen ESG activity escalate and accelerate in the last year, but particularly in the last decade. We've seen the burgeoning acceptability of ESG investing across the globe. There's been rating agencies that have sprung up, products ranging from impact investment in the unlisted space to integration in the listed space, to a whole lot of ESG indices as well. And these really have boosted ESG investing and the implementation of responsible investing. You know, currently there's over 100 plus rating and index providing agencies, which is really a demonstration of the type of appetite we're seeing for ESG across the globe. So I'm going to get straight into it, and I want to ask Alexi a very straight out question. There are thousands of ESG indices which already exist, and Garrett will confirm that a little bit later on. And I've kind of alluded to it, why I think BRICS is looking to develop its own ESG index. Is it because you believe that such an index will potentially strengthen the integration and cooperation amongst BRICS nations in promoting responsible investment in our financial markets? Maybe we can kick off with understanding why it is, Alexi, that Russia in particular has also demonstrated significant interest in wanting to develop a dedicated ESG index for the BRICS bloc.
Thank you very much. Again, this is a very practical story, and Russia is already 30 years old, a new market economy, and you know what was there before. Although very strong elements, particularly in environmental protection, were in former Soviet Union, and that was a really developed area. Well, we started to look at this issue in 2018, and since I was working before with BNP Paribas 11 years and 10 years with ABN AMRO, those topics are very important in these institutions at that time and nowadays. And this experience and knowledge started to transfer into Russian institution, Russian Agricultural Bank. I would say that in Russia, this topic, green economy and green financing, is at all levels, at level of regulators, Ministry of Finance, Ministry of Economy, and so on and so forth, but also at the level of businesses. And it's not because it's fashionable or a trend. Now it's already a practical element of life. As far as indices in Russia concerned, of course, we have Moscow Stock Exchange, which is a member of sustainable stock exchanges already, and this organization is promoting topic of ESG. We have ESG section for bonds, but in 2018, there was no ESG index at Moscow Stock Exchange, not provided by unknown international providers or our own. Russian Union of Entrepreneurs and Industrialists compile such an index and in accordance with international standards, and started to calculate it from 2014, back 2014, and in 2019, a Moscow Exchange, together with the Russian Union of Industrial and Entrepreneurs, created such two indices, and in 2019, we signed an agreement with Moscow Exchange's Russian Union of Industrial Entrepreneurs to create the first ESG ETF in Russia, and which we launched in June 2020. And immediately after that, we started to work on another ESG index. Now it's our own index, but also using this vector of sustainable development. And this applies for Russian corporate Eurobonds companies which adhere to criteria of ESG. Meanwhile, of course, we were targeting at three objectives. First is to create first ESG ETF, first ETF, and increase our international cooperation as an organization. And I joined this consultative group in October 2020, and proposed our team to look at setting up BRICS ETF. To have ETF for BRICS, we need, of course, index. And the ways how to create, there are various ways, just to do our own or to work with international providers. Of course, we looked at situation at all BRICS countries, Brazil, India, China, South Africa, and in all these countries, there is an index, either by MSCI or by FTSE, but there is no unified approach in this case. Therefore, we decided to propose this idea to member countries, to our colleagues, and we got this positive reply from South African colleagues. I would say that probably you are the most advanced for obvious reasons. English is your mother tongue. Maybe.
Well, that's really good to hear that we're making so much progress on the ESG front. So Russia has been hugely successful in, as you've mentioned, in 2020. You launched the first ESG ETF, and then of course there was the ESG index on corporate issuers of Eurobonds. But you ended your statement by saying, South Africa has demonstrated quite a bit of knowledge and capacity on the subject, as well as taking the initiative and the lead around some of these ideas, which leads me to the JSE. The JSE has been a member of the Sustainability Stock Exchanges initiatives, and in recent years, our exchange has taken a number of steps in an effort to promote such sustainability. We've introduced a sustainability segment on the JSE, which focuses on green bonds, on social bond issuances. The JSE has also adopted the FTSE ratings, ESG ratings process to create the FTSE JSE Responsible Investment Index series. So hopefully, we're moving along in the right direction, given the need for ESG to become not something that's for sustainability to move from something that is niche to something that is totally mainstream and part of our everyday lives. So I'm going to move over to Valdine from the JSE, and maybe Valdine can share some of their thinking about all these efforts and this progress the JSE has achieved in the past couple of years.
Thanks, Fatima. Can you hear me okay?
Yes, we hear you fine.
Okay, good, thanks. Yeah, so really there's been three areas of focus from us from a sustainability perspective. And really this has become a part of our DNA and language in everything we're doing, from conversation to practical elements. So the three areas that we've largely been focusing on is: one, leadership and advocacy in the sustainability space; two, specifically data and indices, and we'll come to discuss that now; and then three, investable product. So each of these areas have been different focus areas to promote sustainability and taking leadership on the sustainability journey. And none of these that we actually see as functioning in isolation, but that they actually work together to provide an enabling and supportive environment. And the real element here is to shift flows to sustainability focused outcomes. So specifically, you had mentioned, us being part of the Sustainable Stock Exchanges initiative. In fact, the JSE was one of the founding partners of that initiative, and we sit as a signatory to the United Nations-backed Principles for Responsible Investment, which is a global investor initiative, and that really encourages consideration for all ESG elements in investment decisions. And then we'll come to it in a little bit, but some of our listing requirements around the King Code on Corporate Governance has been significantly influential in following King 3 principles, and is the first stock exchange globally to incorporate them into a move towards integrated reporting. There's lots of efforts in that regard. So just specifically from some of the tangibles and practical elements. From this work, we've actually started some of this work back in the early 2000s, and we were the first exchange to have an exchange-sponsored ESG index. It was our old SRI index, and now it's replaced by a FTSE JSE Responsible Investment Index since late 2015. And this is made up of companies who have assessed using FTSE for good ESG rating models, and who score above a certain criteria or threshold score, and then they get included. And then from that, we actually created a subset, which is the Responsible Top 30 Index, which is an investable product, and created a feature on the back of it so that investors can actually then have tracking and portfolios that they can benchmark against. And this really, again, underscores a global trend, which has become very topical of late, that ESG investing is actually delivering superior returns. And has been doing so consistently, even in downturns. Obviously, we have to apply a caution to any of these products, but notwithstanding that, there has been quite a clear trend. And then you've mentioned that we launched a sustainability segment. So we were very proud to have launched green bonds a few years ago. And these products have been oversubscribed and good pipeline, healthy pipeline of issuance. So to the green bond segment last year, we added the social bonds and the sustainable bonds. And we continue to work in terms of new products. For example, transition bonds and even sustainability linked bonds will be the two new products that we're focusing on. And we do work collaboratively with both the issuers and advisors and the buy side to try and figure out what products actually work. One, to promote a sustainability segment, and two, where capital allocation can actually flow into these products. And really, to support all of these tools and services, like I mentioned, lots in the advocacy and engagement space. So to just conclude or wrap up from all the initiatives, it's high up on the agenda, as I mentioned, and we're looking at it from almost all dimensions: listings, products, data, indices, and then leadership and advocacy, which I think will stand South Africa and definitely the financial services market space, quite strong. Notwithstanding, there's global challenges, even in just the definitions of ESG and how we classify ESG and how we measure returns. I do think by trying to be pioneers and leaders, or staying involved in the space, that South Africa, and definitely a read through to the BRICS, is a differentiating factor where we can try and control the narrative.
Thanks, Valdine. You raised some very important issues, because you've got to have an enabling environment to be able to introduce such initiatives. And the JSE has really kind of geared itself up to be able to accommodate new issuances such as green bonds, social bonds, etc., and create that environment. So if we were going to introduce such an index, there would be the opportunity to introduce products against that index through our exchange. I think where we are right now in the conversation, we've heard that there is appetite for a BRICS ESG index from Alexi. We've heard from Valdine to say the platform exists, the enabling environment exists. I want to move on to Gareth, and Gareth comes from one of the biggest ESG, index providers in the world, the MSCI, which is the largest provider of ESG indices, and they currently have over 1,500 equity and fixed income ESG indices. I was quite surprised by that big number, and I just realized, as Valdine said, that ESG means different things to different people, and therefore it can be quite subjective, and that's why potentially they have 1,500 ESG indices. I think the MSCI World launched their first ESG index in 1990, given the appetite for the ESG indices and ESG growth, this has seen the development of over 1,000 indices. So Gareth, maybe you want to come in and also share some of your views, because you've worked with multiple organizations that have looked to set up such indices. We'd love to have your view as the MSCI.
Perfect. Thank you, Fatima, and good afternoon to everybody who's here. And yeah, look, I think the number 1,500 is large, but when you look at the spread and diversity in terms of what the clients or the institutional investors are trying to target, I think you'll get a sense of how the sector, you can use the word ESG, SRI, sustainability. We think climate's going to be its own segment as well. The evolution, and I think it's the evolution and being able to help clients target that evolution that they are as an institutional investor that we're trying to get to. Hence the size and diversity. And I think it's no surprise. You mentioned our KLD indexes that had its 30th anniversary last year. We all know, and Eid Mubarak to anybody on the line who is about to enter the final celebratory period. But we're all aware that Islamic-based screening has been an investment tool available for a long while, and that's one of the earliest forms of ESG. So if you look at the evolution historically of values, potentially negative screening, investors have evolved through time to understand, as Valdine said, that allocating to your beliefs or your values or your investment beliefs can provide a better risk return outcome for you, while at the same time having an impact on the environment, the companies, the assets that you're investing on behalf of your beneficiaries. Now we've developed into the area of what we see as integration, where clients understand this risk return trade-off. They understand that we've got this 1.5 degree scenario goal. Net zero is going to be the journey, and now how do we integrate all of that into our present day investments to help target that transition? So really where we're seeing it, and that's where you get different types of investors. You can get the universal owner, the likes of the sovereign wealth fund, who is fully invested in the country. They can't divest. They need to work with the economy. They need to work with the companies to ensure a better outcome. I'm sure we're going to talk about some of the BRICS challenges when it comes to climate and climate transitions. It's not as easy for these countries to negative screen. We have to work together to evolve from this. But I mean, if you look at, as I said, some of the drivers have been client beliefs, their views around mandates, targets, but also you've started to see investors become less tolerant of ESG incidents. I mean, you just have to think back globally to Facebook, Volkswagen. We can look ourselves here into, South Africa, a couple of ESG, let's say, governance incidents over the last couple of years, a few environmental incidents in Russia over the last 18 months, and we can go on. Institutional investors are not only becoming more rigorous and less tolerant of these, they're also becoming more willing to act. They're more willing to come in and step in and engage and work with these companies and demand better. And I think that's a key element of that. The flip side is you also see regulatory drivers. I've just spoken about the 1.5 degree scenario. We've got COP26 coming up, jumping ahead, but we've got Paris-aligned benchmarks. We've got taxonomies from the EU driving a more sustainability integration in those markets. I think also, there's a greater understanding and acceptance of the ESG influence on the risk and return that Valdine spoke to. And look, as Fatima, as you pointed out, there is a much broader set of data and technologies available now to investors to be able to understand and gain transparency into all the elements they're looking at, whether it be impact, whether it be ratings, whether it be climate, whether it be screening. So I think there's been a few drivers in the evolution. What I think has been really interesting, and you refer to sort of the number of MSCI ETFs, the flows into our ESG ETFs alone doubled in 2020. So COVID and the performance that Valdine spoke about, because of the construction of these indexes and the targets they have, COVID has really accelerated the view on ESG, but interestingly enough, has really started to segment ESG into the individual elements. So you started to see more direction to highlights on the E, whether it be opportunities in green building for real estate. How do we turn these buildings into healthier, more COVID type friendly environments with HVAC systems? You've looked at the S pillar, where people are wanting to understand how they manage their people who are working home all the time. Social bonds, I think, grew by 3 times in 2019 to 2020 to 15% of all of those ESG bonds that were issued. So I think COVID's been an accelerator, but I think when you look at it, you've seen people have a deeper understanding and willingness to act. Hopefully that gives some sort of background.
Thanks, Gareth. That was a very, very important background that you've provided to us, because even before we can get to the launch of a potential index or knock on the door of the MSCI, we need to sit back and reflect and say, what is important to us as the BRICS countries? What is important? Because we need those criteria. We need to model the data. We need to optimize the information and identify those criteria. So I'm going to move over to the mathematician in the room. The construction of indices is a very big component. We've spoken about the appetite, we've spoken about the environment, we've spoken about the importance, but at the end of the day, it's the practical side of things, actually constructing the indices. We're operating in a mainstream environment where people are always going to worry about the risk and return trade-off balance, regardless of what product you bring to the market. I really want to understand from a construction perspective, what exactly are we looking at here? And maybe Dr. Page can come in and share some practical insight on what that entails and what does it mean and what would that involve?
Thank you. So just to start, effectively, when one is constructing indices on styles or on particular factors, it has to be done in a systematic approach. So what one actually does is you have a systematic rule or set of rules that defines a subset of data. So say you have a universe of shares, and exactly what Valdine was talking to. So looking at the top 30 that she was talking about, the ESG index currently available for the JSE. So obviously 30 shares is a subset of the entire JSE, and they are selected and potentially weighted on a set of criteria. And that's done across a whole bunch of things. So obviously my colleague on the line from MSCI, they're also some of the biggest providers of style-based indices in the world. What one would do effectively is you have a set of predetermined criteria, which are a priori defined, so defined before you actually initialize it. And an idiosyncrasy that comes in with ESG is potentially that these factors or the ranking or the scoring mechanism is actually qualitative. So it's a qualitatively defined set of metrics. But if one has a system that can convert that qualitative framework to a scoring mechanism, what one can do then is utilize that to rank a set of shares. And you can either rank a set of shares and utilize a subset, i.e. like with the top 30 that Valdine was talking about, or what one can do, and there's a couple of MSCI indices that do this, you can actually just alter the weighting of constituents within an index to weight more towards shares or constituents or bonds that have higher scores based on the likes of E, S, and G. And that's effectively it. So to actually run and do, it's relatively simplistic. However, as has been mentioned and should be stressed, it's all based on the underlying rules and how you measure ESG. So you probably would get very different portfolios and different weights from two different providers that use two different rating or metric systems.
Thanks, Dan, but you're leading me into a discussion that is very, very important for emerging economies. And, I really want to bring in Valdine, and we can take some lessons from Alexi on this point as well. Because if I think about the just transition as well, what is important for an emerging economy versus what is important for a developed market. And we don't want to, when you talk about ranking and rating companies that score better on the E and the S and the G versus others. If we look at the JSE, Valdine, the JSE is heavyweight mining. We've got stocks such as Sasol on the one hand, and those are large market cap companies. We don't want to lead to any kind of exclusionary outcomes that would lead to not attracting capital into the exchange, and that would be to the detriment of investors. So I'm just trying to figure, we're going to have that criteria, and I want to hear from Alexi how they thought about that criteria, because, I mean, if we think about Russia, it's also fossil fuel heavy in some sense. We just don't want to land up in a situation where it's to the detriment of the economy. So Valdine, maybe you can come in here with your thoughts around the potential exclusionary outcomes.
Yeah. So you're absolutely right. And I think the key focus here is around the just transition. So a key challenge that most BRICS countries face is the issue of just transition. How do we, versus developed markets or in emerging markets, create something that really supports our economies and gives us a pathway to transition? And as we shift now, it's not that easy. As you mentioned, mining companies, heavy fossil fuel-based companies, there's exclusionary factors, but we've been focusing on metrics that become more inclusive. And then, like I mentioned, we're even looking at products that help you on that journey. So really, it is how, therefore, it is how in these factors, what BRICS countries are measured on. So I think that's really important. And then how strongly each factor weights. And it's an opportunity for us to really influence the global debate and ensure that our perspectives are duly accounted for, because it's not exactly the same to compare the emerging market to the developed market. So an example that comes to mind is, a global redirect to net zero, really. And in our economies, and these are really fossil fuel intensive, and I'll also love to hear from Alexi how they're tackling this in Russia. The decarbonization trajectory will be different and more challenging compared to developed economies. Now, our social challenges are often far more acute that we would need to accommodate. You can't really keep them devoid of each other. So we would need to think of the job losses, for example, in the rapid decarbonization. And in South Africa, we have unemployment at around 40%. So how do we create that balance without creating the exclusion? So often when we speak to very, especially developed market investors, and they'll ask us specifically with our listed companies, how are we going to manage the exclusion, not just from the investable base that we're going to extract, but even just for the liquidity of the market, where some of these are really key metrics. So it is a really hard balance. I think that's why it's really important, especially for BRICS countries, developing nations, to try and work with investors to say, if these counterparts and if these companies are not hitting certain of the ESG metrics, how do they show a plan to transition? And two, the disclosure metrics become so important because the investor then knows what they're working with. So we've also embedded a lot of those disclosure principles in King principles so that you have more of a carrot approach than a stick approach, because you're not going to overnight get these companies truly transformed without the expense of, a lot of social and economic to that country or that nation. So I really think in the just transition conversations, it's really important for countries like South Africa, Russia, the rest of the BRICS nations to help manage those with investors and then give them enough disclosures to our underlying investments and entities so that they know what they're working with and that the plan then is formidable, that we work together on an inclusive plan for us rather than exclusionary measures. It's going to be quite detrimental to have exclusion.
Yeah, so maybe Alexi can share some of their insights in terms of how they managed to deal with such challenges when they launched the Russian ESG index.
So it's a task of Vladimir Vladimirovich, but I would say that recent discussions and situation concerning carbon footprint reduction are very important, and Russia passed through from planned economy to market economy within 30 years. You do not understand how big was task, and naturally this restructuring of industries reduced dramatically this negative influence impact on environment. Of course, we shouldn't be relaxed because we have huge forests in Russia, and they are enough to heat the whole world. But of course, in case of Russia, there are commitments which are pronounced and adhered. Interesting enough, for example, there is a pilot project of Sakhalin Island, which would be net zero very soon in this, and the size of one half of South Africa, you may imagine. It is just only island in Russia, important island and forest, but that's a discussion. As far as ESG is concerned, to my mind, it's a unique denominator in our business. I came from hydraulic engineering, and I was working in Zambia in Lusaka for underground water prospecting with UNDP. And previous session was very much involved or focused on that subject of water management and so on. And ESG become a denominator which unites financial world with a real economy. So, for example, in our index, you have all kinds of industries which are judged by ESG, not by credit ratings. And by the way, our fund is also ESG rated. We did it on purpose because for investors to understand that it's not greenwashing, it's a real, say, non-financial disclosure and plans of these companies. And those are not, I would say, smaller than those from developed world. Those are major gas producers, major oil producers, and so on and so forth. So, but also for investors in such a ESG ETF BRICS fund, it would be interesting to see geographical diversification through Brazil, South Africa, India, China, and Russia. It's already attractive proposition. In addition, those companies which are in our index, that trying to be the best because they have to be the best as they're coming to international markets with Eurobonds. And that's the first reason why they were producing non-financial disclosure. Therefore, that would also discipline our countries to provide necessary monitoring of this collection of disclosures. So this index would be a disciplinary measure as well.
Okay, driving good corporate behavior overall is a good thing.
Correct.
Maybe I'm going to move over to Gareth, who can share some of MSCI's experience with us and add to the conversation and add to what Alexi has said in regards to Russia, as well as to talk about the potential exclusionary outcomes that Valdine spoke about when it comes to emerging markets and issues such as the just transition, etc. So, Gareth, maybe you want to come and share some of your thoughts. Yeah.
Yeah, no, absolutely. And maybe just to pick up a couple of things that Valdine and Alexi pointed out, I think in the area of climate and where the challenge we're facing on that side, I think by definition the climate transition cannot be exclusionary. We can't leave some guys behind because they just don't fit into our model. We need to make sure that everybody comes with us. And I think and again, sorry, speaking as a UK national, 14 years in South Africa, I can't be the expert on the local challenges, but we're fully aware of of our climate conundrum, the huge dependence the country has on fossil fuels, both from an energy production and an economic perspective. So it's very, very difficult for us to have the same transition path as a developed market country. But at the same time, we are all signed up to the Paris Agreement. We've got COP26, I mentioned in November. We've got new impetus with the US commitment, but also society itself. I mean, you've just seen in the last few days here in South Africa, the Fossil Fuel Alliance, getting more and more acceptance of that climate needs to be on the agenda. Broader society is demanding this when you look at climate change and rising levels. So as part of that, we really need to go on this journey. But with that, as Valdine pointed out, countries have different societal and climate challenges to overcome along the way. I think the essential part, and this talks to the area of ESG ETFs or ESG products or BRICS focused ideas, is that governments are in an invidious position, especially in the BRICS. They typically policy-wise cannot turn too quickly. It's not a ship you can steer. It's a bit like an oil tanker. And I think this is where, the financial sector has a significant role to play. And it's no coincidence that I've got our net zero commitment background. Is we feel in terms of our call to action for our clients in the financial sector that there is a huge impact that can be made by the financial segment in terms of driving and demanding a better improvement and demanding of these companies that transition. So when we put a framework together to look at global listed issuers, it's about providing a framework that we can compare the different environments and how they're approaching these transitions, how we can bring that to the institutional market, and how we can get those conversations going. And I think that's where it's really important that we understand that the global climate conundrum is the same. With that, however, come different societal issues such as the just transition. How do we manage that? And that's where we need to be inclusionary. We need to get into the engagement, the stakeholder environment, and work with those companies, like the JSE is doing with their corporates in terms of the advisory. How do we get these corporates to engage? How do we manage that transition, whether it be climate, whether it be societal, whether it be governance, improved governance and corporate behavior? So I think the financial sector has a significant role to play in this. And maybe just to sort of try and put it into perspective, there was a UN report in 2019 that says any more delayed action from investors globally could lead to a loss of up to $1.2 trillion over the next 15 years in investors' capital or global capital if we do nothing.
Thanks, Gareth. And what was also interesting that you said and mentioned earlier was the acceleration in appetite for ESG-related products. I think you mentioned that the MSCI ETFs almost doubled the AUM since the beginning of the COVID pandemic. Am I correct?
That's correct, yes. And the other one that's been interesting is how people have been coming and looking to access more of the greener opportunities. So historically, ESG and values-based screening has looked at excluding the negative and focusing on other elements. And in the climate segment, especially, you've had to focus on the backward-looking emissions. Now you're starting to get an opportunity where investors are looking to access or drive capital towards Valdine mentioned sort of the social bonds, the environmental bonds that are coming up, but also into companies that are presenting alternatives, whether it be smart grids, smart cities. So I think that's what's been really interesting to see the trend. As we always expect, people want to evaluate the risks they have, then they start to look at the returns, then they start to focus on the opportunities. And I really think that's where the exciting part is going to come.
We're moving into quite an interesting space because, majority of the capital inflows, particularly in the South African market, the biggest investors on the JSE is the domestic retirement funds, starting with, the country's biggest government employees pension fund, owns quite a significant component of the JSE, followed by the rest of the compulsory savings and investments industry. I'm going to go back to Dr. Page, because Dr. Page is responsible for designing investment strategies on behalf of some of the biggest retirement funds in South Africa, conducting what we call asset liability modeling and determining of asset allocation and benchmarking, and typically using investable benchmarks as proxies in the asset allocation framework and for performance management purposes. And given this growth in sustainability, responsible investment, ESG, either way you look at it, whatever term you use, I think eventually, it will merge into the mainstream space. So we wouldn't be talking about a capped SWIX JSE index. We'll be talking about a capped SWIX ESG index to benchmark our equities against, or we won't be talking about a FTSE World or MSCI World for our global equity exposure. We'll be talking to the MSCI ESG index for our global exposure. And someone who works very, very closely with such large institutional investors, I just want to pick on Dr. Daniel Page's mind. Does he think that will eventually happen from a benchmarking and performance review perspective?
So most definitely, what we are seeing from the likes of all the large institutional clients and even retail clients at this stage is that there is this large drive towards some form of a more sustainable underlying investment or asset classes to determine. So just to go back, the purpose of the ALM literally would be almost like define a target return, and then from that target return, one would actually develop something called strategic asset allocation. So if you look at the typical building blocks that we would use in asset allocation modeling, that's divided between, say, equities, bonds, cash, and property, if you consider that separately. The way that the world is moving, instead of it just becoming almost like an ex-post exercise of determining what is the underlying ESG of the asset classes and the SAA and the managers that you're engaging with, that you eventually invest with, specifically say with retirement funds, what the movement seems to be going towards is that one would actually utilize the building blocks that have an ESG focus. So exactly as you said, what probably we will see is that what a lot of the literature actually dictates is that, funny enough, ESG investing has a very different kind of return profile compared to, say, just typical market cap weighted benchmarks, or in our scenario, cap SWIX weighted benchmarks, that's based on shareholder weighting. So what one could potentially do, if those asset classes, if equity as an asset class isn't completely correlated or is a relatively low correlation to, say, a ESG benchmark, then you could incorporate that within your SA modeling, and therefore can become a key component within your framework of actually designing an investment strategy. And what that would lead to, obviously, is the necessity for the likes of, as my Russian colleagues have put it, as well as colleagues on the MSCI, you do require, and Valdine obviously also touched on, also you require something that's investable. That's incredibly important. So from a benchmarking perspective, incredibly important, and there definitely is going to be a future and massive growth from that front. When one wants to actually utilize an underlying benchmark that's investable, there are going to have to be the development of these products. And obviously, within the BRICS countries, the main contributors, so obviously in South Africa, we are limited to the offshore amount that one can invest in based on Regulation 28. We do require these products from a South African perspective. It's going to become more and more important.
Daniel, if I can just stay with you, what sort of, from a practical investment vehicle perspective, what sort of, so say we go ahead and we develop this BRICS ESG index, Alexi and us and China and Brazil and India, and we put this together. What kind of solutions could we introduce on the back of this ESG index from a practical perspective?
So going back to exactly what Valdine said, so the key is actually something that's investable. So if there is an investable index that can be utilized as a benchmark, it would be amazing from the perspective of all institutional funds are going towards ESG. Therefore, to have an investable benchmark, one would be able to immediately replicate those. So we'd be able to say, replicate the underlying funds and create, so you could do in-house replication, you'd be able to have ETFs as what our Russian counterparts have done. You'd be able to, just like we have a number of retail like products in the JSE that track market cap weighted and various other types of indices, you'd be able to have this full suite now of ESG related products. And the additional benefit that you get is we normally look at, so all of the, I can speak specifically from South Africa, we look at developing markets, i.e. being the allocation towards Africa and SA. So that's where we would invest in SA equities and bonds and the likes of African equities and bonds. And when we go offshore, we mainly, there's much more of a developed focus. So i.e. investing in the MSCI world, the majority of that is captured. Well, most of that index, it's a huge index, but most of that index is actually allocated towards the likes of the US and Europe. I think what's so important is that this will give us exposure, specifically from a BRICS perspective. It will give us an exposure to other emerging markets that we don't capture. So there's definitely going to be a diversification benefit. So I see from multiple spheres a definitive benefit of having these products, and there's going to be a multitude of products. And eventually one could also get, if there's a high level of liquidity, there'd be able to be derivatives written on these products, which is also fantastic and will be wonderful liquidity and give us exposure to other wonderful emerging markets that we currently aren't actually tapped into.
Okay, and I think that's important. Yeah, I'm going to go over to Valdine now because we want to deepen markets, right? We want to deepen our financial markets and we want to attract investment flows to the BRICS nations. So Valdine, I know that the JSE has been working together with our BRICS counterparts. How do we really promote visibility and investment for the BRICS exchanges, for the BRICS companies through initiatives such as this? And what are you guys doing?
Yeah, so I actually wanted to lead into some of the comments made by Daniel, and then it would also lead me to this conversation of how do we actually work together. But one of the biggest, I think, practicalities we'd have to think of in a BRICS ESG exchange is that there isn't a common or mutually agreed set of ESG metrics on which companies are measured on the basis of inclusion. So that really is one of the dimensions that possibly as a collaborative, we can work together to say, given that there isn't at present a common standard, a common global standard, and that certain jurisdictions are actually moving faster than the others, then we could just try and extract from them, firstly, what's applicable for us where there's a common thread, and two, how do we leverage each other's advances to say, right, this works together now as a collective, and it gives us something compelling for the benefit of all. So for example, Russia's made different strides in some of their ETF products. We've made some massive strides in, for example, our bond products. Are there opportunities of product creation from common sets of principles and benchmarks? The other important point is coming back to is that the BRICS countries do face this key challenge of just transition. So really for us, I think it does work on the merits of leadership and on advocacy. How can we work together to influence the standards debate that's currently happening? And that would be an effort to converge various ESG reporting and measurement frameworks, such as that, for example, under the IFRS Foundation, and then really choose things that are relevant to each of our nations. So if I look at some of the ESG metrics we have in our index, we actually looked at global markets, and we're doing it on the FTSE for Good measurements. But in South Africa, a BEE rating matters, where an empowerment credential matters for companies in our domain. It might not be applicable in the Russian domain. So those are elements that we got to add in because it does stand to the diversity measures then for South Africa. So I think one of the things we can do more tangibly in working, whether we create an index or just strengthen each other's knowledge of products, or then creating investable channels for the capital to actually flow to our nations, is to work on stuff that will be common metrics for us that we can stand on globally. So we'll have to pick what is common to us. Definitely lead into our own idiosyncratic issues for our markets that we would need to lead on to make the world, smarter about basically what challenges we face as BRICS countries, and then share knowledge through some of the successes or the advances we've had where Russia's moved faster than South Africa, or South Africa's progressed faster than Russia, and vice versa across the continent. So I really think that's making a deliberate effort on those three topics: leadership and advocacy, data, indices, and then product, real investable movement, can really stand us strong on a global arena.
All right, thanks, Valdine. So, in fact, I've got a whole lot of questions that have just come through, and I'll try and address them slowly because I am concerned about time, because we're close to breaching the hour, the hour slot. And in fact, we've got a question here that's come through specifically for you, Valdine, that says, do firms that were on the RSI automatically qualify for the FTSE Sustainable Index?
That is reviewed based on the metrics annually. So we had the SRI index, and then it was replaced with the responsibility index in 2015. So currently what we have right now it's reviewed annually on a number of principles. So there's a framework, which are basically the FTSE for Good measurements. And then companies are assessed on those principles, and then there's inclusion and exclusion factors on it. And then from that, like I mentioned, the tradable index is really based on liquidity as a measure of that, and that it comes out. So it's not automatic from the one index in the migration to the next, but it is based on criteria. And if you want, you can drop your email. Very happy for our team to work through those principles of inclusion or exclusion, and that will give more technical granularity of what are the principles or the metrics for inclusion in that index.
All right. I'm going to move over to Gareth, because I think that this is directly applicable to you, and this individual raises a very, very important point. He says that in Europe, the underlying holdings of some broad-based ESG ETFs are very similar to traditional benchmarks such as the MSCI World or the S&P 500, leading to questions around whether these strategies will provide investors with the desired sustainable impact, and if the higher fees attached are justified.
Thank you. Very, very, very good and very interesting question. I think I think the fees question should go to the issuers and the financial advisors. I'll leave that one there, unless one of my panelists wants to pick that up. I think the first question is actually a very, very valid question and goes to your original comment, Fatima, in terms of the wide array of products available, and then my subsequent comments around the broad nature of what ESG means to people. And I work on the adage that the more acronyms there are associated with a field, the more development and the more harmonization we need. And I think when you look at the field of ESG, I think we in ourselves have used 5 or 6 different acronyms: ESG, RI, SRI, sustainability, climate. We could go on. So I think to answer that question, which is obviously what we're here to do, is I think sometimes you need to understand what the investment theme is of the product, and not all ESG ETFs are alike, and I think you've spotted that. I think a key part is trying to understand what is the target outcome for that product. ETFs are created to be a easily accessible wrapper for an investment theme at a lower cost than maybe other strategies, and understanding the investment theme and the target of that fund are critical to understanding where it fits into your allocation, where it fits into that portfolio, and whether it matches with the values or the investment outcome you're looking for. And again, like Valdine, more than happy to have a further discussion in terms of that, because it is an interesting field to be navigating.
All right, thanks, Gareth. I think this one's definitely for Alexi. The individual speaks about greenwashing here in particular. How can asset managers, and investors be assured that ESG is more than a simple tick box approach, and that you are achieving the sustainable outcomes in a good way. So maybe you can speak to your experience in Russia with some Russian companies, as well as with investors in Russia. Alexi, over to you. Alexi, sorry, you're on mute.
Thank you very much for this very important question and good question. And indeed, a verification of what is inside the portfolio is very, very important. Therefore, there are two sides of it. First, a reputable index provider as MSCI, which not only uses its own expertise, but also retain experts in certain areas. So ecologists who could really certify that this company is doing right things. Because for financial specialists, it's a very big challenge to say how much is producing this or that company, and how detrimental its activities. Therefore, you need to retain experts in particular field. Therefore, as I mentioned, ESG is very close to real economy. And this is like one denominator. In our case, we rely on experts again. This index is compiled by a company which retains experts in certain areas. So, and also with reference to what we could do as a unified product, there is a way of cross-listings of certain financial instruments between Johannesburg Stock Exchange, Moscow Stock Exchange, Shanghai, and so on. So cross-listing is a very important area. And ESG also helps to overcome legal issues because, for example, our ETF is in Russian law. Johannesburg is using its own law. So therefore, this ESG approach is very useful for us to have a common approach in BRICS and maybe further on, because we do not exclude investors from other countries.
Okay, thanks, Alexi. There's a question that's come through for Valdine, but I also want to touch on what Alexi said. So let's talk about this issue of cross-listings amongst BRICS, because I've heard from a practical perspective, it's incredibly difficult to achieve. And I think I had this conversation with Gareth a few weeks ago, where if we launched a product on the JSE and we wanted it to be cross-listed amongst the other BRICS exchanges, what does that actually entail? And then the question for Valdine is, does the JSE have a course on ESG investing?
So the first question, yes, the cross-listing is a challenge because it will depend on the product as well. And then you have to take into account different listing frameworks, and then how do you actually, address issues of fungibility? Can the registers be, transferred easily? Secondly, are there any market regulatory conditions that you have to impose that are inconsistent between markets? So actually the cross-listing is doable, but it will be with lots of challenges, and I think we'd have to bring it down to a product level. As an example, years ago, in fact, well before my JSE days, the BRICS nations embarked in a cross-listing of a index future, and basically it was our own index futures from each of the BRICS nations, but cross-listed on the different exchanges, and then obviously traded in the local currency of that market. So for example, a top 40 index from South Africa listed in Russia and traded and settled in the local Russian currency. But we didn't have much take-up. It was quite a complex structure. So the merit was good, but the actual take-up is bad. So I think you do need fluidity of the product. So maybe then, to Daniel's comment earlier, something like common metrics of index might be suitable, and then each exchange creates product that would be applicable to their market, but based off common indices. That could work. For example, you've got product on MSCI indices globally that works, and you've got a common reference, and then they have product that makes sense for that marketplace. So that's an alternative to look at if cross-listing structures become too complicated. With regards to a course, we do have courses and in different various ways, shapes and forms. Like I said, we've been doing courses at an institutional level to boards. And again, I urge you, if Fatima can share our details, email details, very happy for you to be in touch, and we can see if it's at a corporate level or an individual level, and we can figure out what's the right course or content that we would need to put in there. So very open to discuss and see what we've got available, and any new additions to the curriculum if we want to add.
Thanks, Valdine. Alexi, there's a question for you. The notion of carbon offsets and the proposed push for net zero, are investors and asset managers potentially barking up the wrong tree, or is there more than meets the eye? So controversial question coming through there.
Well, of course, we're also looking at new products. As Gareth mentioned, there is a potential for climate index, and that's on our agenda following these two indices we used, and we will be developing it in Russia and maybe together with international providers. For the time being, ESG investors are only learning in Russia, I would say, and this is a new topic, but more and more investors are joining this area, and they're really important for them.
Okay, there's one last question, which I'm probably going to give to Gareth, and then I'm going to take a round of closing off comments from each of the speakers. Gareth, everyone is looking to ESG to play a role in the global economic recovery from the pandemic, particularly in South Africa. Also, we have an infrastructure rollout plan, and in fact, that's one of the topics for discussion next week. A lot of people believe that impact investment outside of the traditional methods of ESG integration, etc., can assist in ensuring a sustainable economic recovery, particularly across emerging markets. Do you have any particular view on that?
I think, yeah, maybe one comment and then a view. I think the comment would be, we shouldn't rely on ESG to solve our problems. It has to be the other way around. ESG is the channel through which we can achieve. And again, ESG, climate, as I said, there's a lot of acronyms. We've typically talk around the journey to net zero or the sustainability journey, because for some corporates and some investors, sustainability means the ability to operate another day, not necessarily 5-10 years into the future. So look, I definitely think so. But I think, as I said before, that this is a real big opportunity for the financial sector, of which, look, I would imagine the large part of the attendees today and we're all involved in, have a significant opportunity. I think COVID last year was a big turning point for a lot of people understanding the value, the shared value concept, that actually we are in this together, that this climate journey is one we have to work on. And as Valdine mentioned earlier, and we've spoken about, with that comes challenges, and how you as an investor then want to address those challenges, whether it be social inequality, poverty, alignment to the social development goals, alignment to your values. We, as a business like MSCI, we need to make sure we're there to support the investors by providing transparency, whether that be data, indexes, analytics, or ways for you to get insights in. Is this, to the comment around greenwashing earlier, is this investment, and the question on the ESG ETF, is this investment fit for purpose? Is it going to get the outcome I want? And then going ex post and being able to say, well, what is that impact? And I think that's our critical role in this whole ecosystem, because it is that. you know, we're all involved as investors, as an ecosystem, is providing the right platforms for investors to make better or more informed decisions with a common target in mind. And hopefully that gives sort of some insights or some answers to that question. But I definitely think we can't rely on ESG to do it for us. We have to use ESG or sustainability to make it happen.
Okay, these are very, very important points. And before I wrap up, do you want to leave us with any parting comments, Gareth, before I move over to Dan, Valdine, and Alexi?
My final comment really would be, not to repeat too much, but the emphasis is, 1.5 degrees is the goal. Net zero will be our journey. And not to use a cliche, but we are all in this together. So that shared value and how we solve that problem is going to be critical. The fact, and I should think we should, as a panelist, should take my hat off to yourself and the BRICS Business Council, and I thank you for the invitation, but for bringing this type of conversation together, because it's only through these type of conversations that we understand the challenges and we can work towards the solutions and hopefully drive improvements, foreign direct investments, or whatever the desired outcome is for this investment group. But thank you, and to the attendees too.
Thanks, Gareth, and thanks for joining us. Alexi, over to you. Any parting comments? Alexi, you're on mute.
I believe we are all on the same page, and as Gareth mentioned, we are not immune in this situation. So air, water, and geology, and there are no boundaries for this, and all people are influencing all this, particularly businesses, and we know how active businesses, but they need to comply with the rules, and rules could be ESG criteria, and all this is very helpful in fighting for this climate change and curtail this 1.5 degrees ceiling.
Thank you, Alexi. Dr. Page, any parting comments from you?
Simply look at from just like a purely academic perspective, what we can acknowledge is that the study of ESG is something that's unique. It's very interesting. It's obviously there's a lot of academic literature on it so far, but it does bring about new avenues of research and a certain qualitative appeal that can be converted into a quantitative applied investment strategy. The world is moving in this direction, and I think it's essential for, as my other colleagues have stated, to actually the financial sector to actually get on board and initiate things like that, because ultimately it will be definitely to the benefit of our clientele. From a pure investment return and diversification perspective, it will ultimately be beneficial. And at the same time, the altruistic nature of the entire product will be beneficial for the world. But purely from risk return, it's definitely beneficial, and we need to move on it.
Thank you, Dan. Those are good parting comments. Valdine, any last comments from you as the JSE?
Yeah, one of the comments I saw was that the lasting effects of COVID is definitely the channel to sustainable investing. And you see it, Gareth gave some stats of the capital flows into sustainable products. So I agree. I think the collaborative approach will put us stronger as a BRICS nation. And I do think that this is not a topic that, you put on the side and you address later as an after fact. It has to be fully incorporated in all status quo of your businesses and operations and across the value chain, from investing to, service providers like ourselves, for example. So more people that lean into the conversation, the more we can respond to investment managers in what products and returns they're looking for. The more we work together to find differentiating factors, I think are really important. And it's about keeping that conversation going. And as this is in a very fluid space at the moment globally, I think it's our responsibility and it's our opportunity for us to lead some of the narrative on things that matter to us as a BRICS nation. You know, we've covered a lot of it under the Just Transition framework and what that means for us as a developing and an economy that is very different to other majors. So I look forward to ongoing conversations through this universe. Thanks for the opportunity. Thanks to all the attendees. You know, it really matters that you took the time out, and we are very happy to engage one-on-one or through this forum, through Fatima's forum. Very happy, and thank you for your time.
Thanks, Valdine. You know, to end off, COVID has really kind of exacerbated our global vulnerabilities, particularly amongst emerging economies and even the developed economies. But what it has done is it's created this momentum towards ESG. And I almost feel like we need to capitalize on this momentum to achieve all those good things that we want to achieve. You know, we talk about the diversity and inclusion debate. We talk about reducing global inequality. We talk about climate change. And I think it's an opportune moment to be able to bring to the attention these very critical issues to secure the long-term sustainability of our people. So I'm excited. I really appreciate the dialogue. And Alexi, I'm going to increasingly put some pressure, particularly on Russia, to convince some of our other BRICS counterparts so that we can get this index going and we can start integrating ESG across our nations. So thank you again to all of our participants and attendees for joining us today. On behalf of the South African chapter of the BRICS Business Council and our sponsors, 274 Investment Managers and the Industrial Development Corporation of South Africa. Thank you so much again, and we hope that you found the dialogue most valuable. I want to alert you to a very interesting discussion that we will continue with next week, still under the banner of accelerating a sustainable and inclusive COVID-19 recovery. For our South African participants, as you know, the presidency has set up a separate division that's focused on the infrastructure rollout plan, and we're going to have Mohale Regate, who's the Chief Investment Officer of the South African Infrastructure Fund, based at the DBSA. We've got our colleagues from India joining us, who are significant investors in infrastructure investment globally. And then we've got our private sector participants who will be in the call as well. We'll be discussing priority projects. We'll be discussing project readiness. We'll be discussing coordination, implementation, triple P, funding, regulation, timeframes, feasibility to commissioning, removing structural constraints, and we need to accelerate the growth part and reduce the challenges that some of our BRICS nations, including South Africa, face at this difficult time globally. So be safe, go well, and thank you to everyone for joining us.